Warning: millions of American families are at severe risk. The Federal Reserve warned us all that there would be pain as they aim to soften the labor market, increase interest rates, crash the housing market, and attempt to bring down prices and overall inflation over the next several months. And Bank of America just warned us all to expect to see a harder landing beginning early Q1 2023, with the high likelihood of the U.S. economy seeing a loss of over 175,000 jobs per month. Bank of America sees trouble looming in the distance, and this is in spite of the latest jobs report that shows the U.S. labor market is in decent shape, which I have been saying all along. And it's not just the labor market that is expected to take a major hit. Millions will be wiped out. Robert Kiyosaki says that the big crash he predicted is now here. But there's more to the story, and you don't want to miss out on what he had to say. Silver, gold, and fine art are amongst the major assets that could very well be affected and could cause some huge swings in portfolio balances, and now could be the perfect time to get richer. Notice the keyword, richer. Now, I can't share all that he had to say here in this video, so if you want to know more about how to get richer, contact me ASAP. So according to Bank of America's head of economics, we are currently looking for an official recession to begin in the first half of next year. Why? Well, funny you should ask. Besides the obvious reasons that we have been discussing here on a daily basis, the Federal Reserve has a dual mandate to ensure price stability and to aim for maximum employment. So please allow me to explain that maximum employment is relative and doesn't mean necessarily that millions of jobs won't be on the chopping block. Now, this is very important for families who are already on the brink of collapse financially. It is only going to get worse as we bring 2022 to a close and start up potentially one of the most financially devastating years in history, 2023. Now, if you haven't made plans yet to bring your budget in check, stash away cash and savings and start creating income-producing revenue streams and cash flow-producing assets, then I don't know what you're waiting for. And if you need help getting started, see the links below in the description. And be sure to watch my previous videos, especially the uploads focused on side hustles and starting small businesses on the side to supplement income and build wealth. So in June, U.S. Consumer Price Index, the CPI, saw its biggest 12-month increase in 40 years. While the headline CPI number has cooled off slightly from its peak recently, September's inflation rate was a worrying 8.2% year over year. And given the eerily mysterious, or shall I say fictitious, labor market strength reports, with September unemployment rate hovering below 3.5%, the Fed is raising interest rates aggressively to bring price levels under control. The central bank increased its benchmark interest rates by 75 basis points last month, and that marked the third time in a row we saw such a huge increase in rates. And I'm of the opinion that Jerome Powell, Federal Reserve Chair, is not going to be letting up anytime soon. Expect to see the Fed continue to hammer down the throttle on interest rates, with family budgets, savings, jobs, overall livings, homes, houses, apartments, cars, you name it, all at risk of default, bankruptcy, being wiped out completely, repoed, and virtually totally obliterated as the Fed tries to shut down this runaway economic catastrophe, i.e. inflation. Remember, they said they will accept some weakness in labor markets in order to bring inflation down. This means jobs are at risk. Non-essential employees and non-essential businesses, they are talking to you. Are you recession-proof? Well, I sure hope so, because either way, we're about to find out. We have already seen the wipeout occurring in the auto industry, with dealerships laying off salespersons by the buttload. This is the beginning of the reset, folks. This merry-go-round is about to stop. Think of it like musical chairs, and I would hate to be the one left standing when the music stops. But instead of there being one too many people compared to chairs, there'll be thousands too many, who ultimately will be eliminated and deemed the losers. With an optimistic 6 months of weakness in the labor market being a flat-out lie, because when this game is over, it is going to be quite some time before the next one begins. And the odds that people survive the wait in hopes of being picked up for the next round, well, that isn't looking very promising, if I'm going to be honest with you guys. So according to the Fed's latest projection, Federal Open Market Committee have a median forecast of the unemployment rate reaching 4.4% beginning next year, with economists realistically seeing this figure closer to 5.5%. So do you know what that means? Stocks are at risk. negative job growth, recession. When the economy contracts, corporate profits will likely deteriorate. And do you think your job is going to be safe when the company is losing money? Optimistic look ahead? I don't know. If you have 10 or so years investment horizon, meaning you can buy, hold, and patiently wait to see a respectable return on your investment, then maybe hold the S&P 500 and watch and wait. But this is not financial advice. But experts believe the worst thing to hold right now is in fact the S&P 500 wholesale. Despite its jump after September CPI reports, which I think that is some phony prop up to try and capture the last few bit of suckers out there before the index fund is dumped by the big dogs. But what do I know? Subscribe now if you haven't already. Up next, we're going to discuss the future taxpayer burden that is set to cripple the middle-class American family already barely getting by and struggling to stay afloat. The prolonged period of economic expansion, enhanced by trillions of federal dollars printed and spent to stave off a pandemic-caused economic crisis, has led to tremendous inflation, and the bill is now coming due. And guess who's going to pay for it? Bingo. You're not going to want to miss that one. Tax burden passed on to U.S. families and working class impacts the finances, livelihoods, savings account balances, the self-employed and small business owners, investors, those on government assistance programs, SSA, SSI, Medicare, SNAP food stamps, and EBT benefits, and more. Make sure you guys watch this video next, and be sure to check out this playlist too. Subscribe to the channel if you haven't already, turn on notifications, share, comment, hit me up. My info's in the description. You guys take care, be safe. I'll see you on the next one. Bye.